Hello everyone and welcome back to another portfolio update. In this update, I'm sitting at $260,474 inside of my Wealthsimple portfolio, and what a month it has been. We've had record highs in the TSX and the S&P 500 in the last month. And just on Friday, we had a massive bump up in the stock market, over 1% in all the major indices, and it was the result of the Jackson Hole Summit, where Fed Chair Powell basically signaled that the Federal Reserve is very likely to cut interest rates at the next FOMC meeting in September. And the odds on the CME Fed Watch tool are showing today actually went down a little bit. So on August 22nd, it was showing 85% chance of a rate cut. So right now we're between the 425 to 450 range, and we're gonna, if there's a cut, it'll probably be a 25 basis point cut, so it'd go down to the 400 to 425 range. But there was an 85% chance on August 22nd, and today, when I'm recording this on Sunday, August 24th, it's gone down to 75%. So still very high chance that the rate is cut in September, but not as much as on Friday. But nevertheless, it signaled a massive uptick in the markets on Friday. Another huge thing was the U.S. national debt. So if I go to usdebtclock.org, you can see that the U.S. national debt has surpassed $37 trillion dollars, and this was so just like last week it was reported, I believe. Like maybe it takes a little bit of time for it to be like officially reported in the news or something, but we're already at 37.3 trillion, essentially. We round up that 272 billion to basically zero point 0.3 trillion. So 37.3 trillion already. Like it's rapidly increasing. So the it's insane. The United States, they're spending over 20% of all taxpayer revenue just on paying interest on the national debt, just paying the interest, not even like touching the principal. So that's insane. You can see that interest on the national debt has now surpassed the defense budget. And I think pretty soon it will take over Medicare, Medicaid, and Social Security. So crazy, but all this to say is it is so important to be invested now more than ever. Like just even a few years ago, before COVID, before we had the massive stimulus, reckless government spending in 2020, 2021, massive deficits in both Canada and the US. It was a bit of a different time, over 20% of the taxpayer money just going to interest on the national debt. That was not happening then, but it's gotten way worse. The situation's gotten way worse. So it's so important to stay invested right now. I can't reiterate how important it is to be invested. Stay invested. Do not sell your assets unless you need it for something. If you can stay in the market, you should, because right now, like the inflation genie is out of the bottle. There's no putting it away. The inflation is going to be increasing rapidly. Like if you tell me, like, look at this number, see how fast it's increasing, you say, oh yeah, well, the Fed reports, that inflation's cooling down. Like, I don't believe that. It's those government numbers are very manipulated in order to basically tell the public a lie that inflation is very, it's under control, it's pretty low. The fact that they have numbers, like they have the core PCE, they report that, and they use that as a baseline, which is actually higher than the headline inflation rate, where they strip out food, energy, and shelter to show a more something that's a less volatile inflation rate. Who's paying for things beyond food, energy, and shelter nowadays? Like, I feel like that's like the bulk of people's payments. So the fact that that's even a measurement of inflation is ridiculous. Like that is insane. That, like, okay, oh, food, energy, and shelter. Like, those are the major tickets that everyone's spending the bulk of their income on. So it's insane. So like, you look at those numbers and you think, should I really, you really have to protect yourself by staying invested, in my opinion. That's just my opinion. It's not financial advice, but you can do what you want. But that's my opinion that it's very important to stay invested at this time period because reckless government spending like that is just going to cause a lot of inflation. And the best, if you own assets, there's gonna be inflation in the stock markets as well, like asset price inflation. So it's a transfer of wealth from the have-nots to the have-yachts. It's a funny saying. Pierre Polyev says that. It is a good thing though. It is a good analogy because really people who have assets, when you have government spending like this, it really causes that inflation. And if you have assets, they'll go up in price as well. And we're seeing that in the stock market right now. The stock market is just going, skyrocketing because of this. And yeah, so you can see just the 90-day chart. The stock market's just been rallying like crazy. So enough about news. Let's get into the portfolio overview. So in the month of August here, I received $607 worth of dividends. So if we go to the dividend history graph here, you can see my breakdown for dividends this month. So $113 from BDY, 260 from ESPX, 182 from ETSX, and $51 from SBLT. And month over month, so last month I was sitting at $250,000, so over $10,000 gained in price appreciation for this month. So that's really good. And I can see with all my positions that they've just continued to increase steadily. So yeah, and in the month of August, I've added $1,250 worth of deposits into my Wealthsimple account here, and yeah, that meets my goal for August. So there is one more pay period at the end of the month. I'll probably just pause that because I did have some extra bills in August to pay, like dentist, gym membership, things like that. So I'm going to probably pocket the last paycheck, and then I'll resume investing in September, 1250 again, and continue with my goal to get to $33,000 added to my Wealthsimple portfolio by the end of the year. So I'm all on track on that in that way. So, and then also my employer RPP registered pension plan and employee savings plan has been doing really well. So with that combined, I'm over $320,000, so 323K right now. But if I go into the take a peek at this portfolio, I just have an S&P 500 fund and then BCE shares in my employee savings plan. And yeah, so this has just been on a tear as well. It's basically like a VFE, so it's been doing really well. And Bell has actually recovered quite a bit, so that is nice to see. So I've seen where I've been down well over 30%. So seeing 23.9 is, it's a lot better than what it was. So we're seeing that the current prices are at the $35 range currently. So a pretty big recovery because it was under $30. And in the last 3 months, I believe the price has increased over 20%. So that's been some good recovery there, and has really contributed to the this part of the portfolio increasing significantly. So very happy with that. Yeah, so that's about it for this portfolio update. I'll see you guys in the next one. Thanks.